Hey Vic.
Hello, brother.
So what's on the topic for today?
Money.
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 What about money?
Uh, Crippling debt.
Crippling debt
Yeah.
or debt in general.
Sure. Yeah, I guess there are good forms of debt and bad forms of debt.
So what were you exploring in the terms of debt?
And debt, I was exploring how to get some of, what are they called? Basically camcorders for the show to maybe start going ahead and filming us and all that. But I do not make a lot of money. And so I was looking at ways of getting these camcorders. And I thought, because they're $700 essentially for a camcorder.
Okay.
And or for both of them. And basically, it came down to I can put this on a card or get a loan for $1,000 and then pay off the three, and then or just immediately give back the three and then go ahead and pay off the rest later.
So you're coming up with an idea of how to stretch your funds, basically. You're
Yeah,
trying to plot out a way to kind of reach a little bit further for finances to try to get something that would hopefully help out your finances in the future, maybe. Like
maybe.
a little bit of an investment in your future,
Yeah, maybe.
possibly.
Yeah. So
And so, I mean, you were talking about less than $1,000 to, that you're reaching for.
yeah,
But it is still something that you have to reach for. It's not just in excess of that you can
yeah,
just be like, oh, well,
yeah.
I can just kind of, round up these $700 like this.
Yeah, and I think most people have this issue because most people do not have an excess amount of money for many reasons. One, the way the area in which they're living at, and two, people just don't make a lot of money. People like me, just regular who have regular jobs and who are working regular hours, or even part-time students or full-time adults with kids, they just don't make enough.
Yeah, it was interesting. Wages are very interesting. I was reading an article that was hinting on college students trying to find careers in fields that would be paying higher salaries right out the gate, and they were talking about a medium salary of about $70,000.
Yeah, sounds about right. Because even my degree, with my degree in basically it's a bachelor's in business industry management. I'm sorry, in automotive industry management, and out the door you're looking to make about 60,000 entry level position.
Okay, well, they were insinuating that this field, I forgot what it was, like computer engineering and software application development, I think. And they were insinuating that these jobs are the jobs that would provide a higher salary right out the gate. Because if you're not looking into these fields that would allow you to make these types of salaries, then you're considering a job position making a salary at 50,000 or under.
Yeah, pretty much. I mean,
And
most people make about 50,000 or under.
not people with degrees.
Oh,
That's the the unfortunate downside of having this degree, and that you were just trying to make the example that average people can make up to about $50,000 a year or more. I mean, that's kind of a little bit more of an average mean for people without degrees. So people with degrees would be paying all this money to try to get the degree and only end up with a job that's paying a mediocre wage of maybe $40,000 annual salary, and that doesn't allow people to sustain themselves. If you have somebody who's making about 40,000 a year, kind of has everything in place, it's difficult. You're hearing a lot of stories right now that students that end up getting out of college are trying to go into the workforce only to find out that they're not even able to save up to own a home.
yeah. Well, that we can kind of go ahead and push because that leads into a whole nother topic of student debt and how it affects them and everything. But for the average person, when you think of debt, you think of, or if you think of loans, you think of these small little payday loans or um, loans that have really short
Short term,
terms. Yeah,
short
short-term
term
loans.
loans, right?
Yeah, personal loans and then stuff
Well,
like that, or auto loans.
yeah,
Those are the most kinds of debt everyone kind of
the majority of
knows.
people,
Yes.
yes, yes. I
Well,
guess what I was kind of shining a little bit of light on is just a little bit deeper as we dive into the topic of how far this financial crisis reaches. But yes, the vast majority of Americans have to deal with just people that don't have degrees and are out here working consistently and just can't afford to have any little mishap happen in their life, any
Yeah.
kind of life emergency,
yeah.
or something just kind of you just need some more finances,
Yeah.
and you were kind of living on the brink
Yeah.
of not being able to supply those finances.
Yeah. So a lot of debt people see, or a lot of loans people look at, and they're like, "Don't do that. You don't want to get that." I think one of the worst ones out there are going to be these little payday loans, where they can go ahead and charge up to 100, or they're basically getting back 100%, 200%, 300% of whatever it is. I've heard even upwards of 500% returns.
Right,
Yeah, 500%
right.
returns, which is outrageous.
Yeah.
And they're always trying to stop them, but it seems like every time they stop them, these payday companies are essentially evolving. So one of them would be in the case of Ohio, which basically says that they can't charge outrageous forms of interest of on these short-term loans. And the way they went ahead and went around that is say, oh well, it's not a loan anymore. Now it's a short-term mortgage, a $300 short-term mortgage.
Yeah, so basically, what was happening is that if these companies were registering as short term lenders, then they weren't allowed to charge outrageous interest rates. And so the workaround that they figured was, well, we just won't license our companies as short term lenders. We'll just go ahead and apply as mortgage lending.
Yeah.
So they're doing these workarounds, and then it gets a little bit more involved when they start to involve Native Americans
Yeah.
and their companies so that they can have a what is
Less regulation.
well, you basically can't regulate anything. It's like sovereignty or something
Yeah,
like that.
because you mainly the United States doesn't get too much involved with Native Americans in terms of what goes on in their reservation. You know,
Right.
obviously, if something, someone gets hurt or something like that happens, they do
Yeah.
get involved. But for the most part,
They have a different set of rules.
yeah,
that,
they live by a different set of rules than we do.
They basically don't have any regulation, kind of, where they don't have to deal with this. It's another workaround. And so these short-term lenders, in a sense, are predatory to to the environment. In a sense, they are seeing that the people who are utilizing these types of loans are like what we're talking about, vast Americans that are just living paycheck to paycheck and earning a medium
Yeah, and when they can't pay
salary.
off their loan, they have to get another loan in order to pay off that loan, and it just kind of seems like it's just this circle. It's just this kind of, I don't even know how to describe it. Basically, it's just a circle of debt. Like you just
Yeah.
can't get out of it. Once you're in
Right.
it, you're in it.
Yeah, yeah. I
And
mean, you can almost see all debt like that. Not necessarily that once you're in it, but essentially you're almost always gonna, if you're in this world and dealing with stuff, you're almost always gonna have some kind of finances. Otherwise, if you don't have any kind of credit cards or any kind of loans or anything like that, you're living a tough life.
yeah,
You know?
like even people like going to credit cards. I don't think people realize that they're essentially small loans in themselves that are instantaneous you get instantaneous approval, right? And it's like, oh, you have let's just make up numbers. You have $1,000 of available credit, and you see something you like, $50, not something you typically buy, kind of outside your, or $200 outside your means, and you're like, yeah, sure, go ahead. When you swipe your card, it's instantaneous approval for that short-term loan,
Yes.
and that's something. I think that's kind of what like incites people to go ahead and use it, because to them it's just like, they approved me for 1,000. I'm only using 200. It's under 30%. I'm fine.
Yes.
And instead of that, it's just like, I am asking for a loan for $200 or $300 or however much it is.
Yeah, credit cards get really tricky because yes, they do give you a lot more approval, and it is like you said, rather instant. They are approving a lot more people and allowing people to just freely use this credit however you want, and without knowing how to safely utilize some of this credit, it's very easy to get into a situation where it's overwhelming to pay it back.
Yeah, and so it's crazy. And then also the fact that they can, if you miss a payment, they can go ahead and raise your interest
Your
rate.
interest rates, right?
Yeah. So instead of starting out at 15%, 20%, they can jack it up to 35%. Is the most I've seen on some of these credit cards.
Yes.
And so it's outrageous.
Yes. But there's a lot of other incentives that they give you. I know just from personal experience, when I was reestablishing my credit, some of the things that I was looking for were 0% interest rates for the first 12 months, the introductory rates, which are very good. They allow you to go ahead and make purchases. You're essentially loaning without any interest, which is the best way to loan. Except that once your 12 months runs out, if you haven't paid your balance off, then they start, you start accruing interest on your balance. And that's how they start making their money. So, in essence, they're giving you a year to kind of play around with your credit to see what you do. And if you have any kind of an outstanding, an unpaid balance, then they're able to make money off of that from the interest that they can now charge you.
Yeah,
and if you keep a balance, they will continue making interest off of you.
Yeah. And the other thing is that even if you say, well, I have a credit card but don't use it, they'll go ahead and take that card away from you because they're not making any money off of you.
Yeah, if you give, I think some of them are like 12 months. If you are not using a card for 12 months, then they'll notify you and let you know. If you don't use it, we will close this account.
Yeah, so it's weird.
Yeah, the credit card game is very tricky. There's a bunch of
it's weird. It's like it's set up against you.
Well, it's set up against you when you don't know
what to put on there.
When you don't know how to play the game.
Yeah, it seems like the only thing you really want to put in there are like subscriptions. Like if you have a Netflix account, Netflix subscription, Hulu, anything else, Motor Trend or anything.
When you don't really have much of a disposable income, when you don't have really any other, excessive income, then yes, you can't just start, charging outside of your means where you're not going to be able to pay this back. Just because you can pay back the minimum requirement payment, that's not going to get you anywhere. That's another regulation that they imposed on these credit card companies, where now they're requiring this credit card company notify the borrower that by paying the minimum wage, it's going to take almost forever. It could take years and years to pay off a low balance, and that's just not the way to do it. So again, like I said, if you're unaware of a lot of these systematic little things that are involved with the credit card companies, then yes, it can seem like it's set up against you.
Yeah, it is. Because my ideal world is to go ahead and have like a credit card company and tell you, hey, you're going to borrow $100. I'm going to charge you 20% up front. You have, like, let's say 3 months to pay off $120. Not going to charge you anything for those months. For those other months, this is just flat, pretty much like, I don't want to say flat rate, but this is just going to be the the kind of a cost it's going to be.
Mm-hmm.
So,
Well, you're looking for you're getting back to like
yeah.
a short term loan.
Yeah, but at least this way you're not constantly accumulating this interest, that it's not charging you whatever you went ahead and paid and said, hey, we're going to go ahead. You can pay $50 the first month and then the other 50 the next month, or 20 the first month. It doesn't matter how you pay it. So long as it gets paid in this set time and this is the set price.
Yeah, that's a short term. That's a short term loan.
Is it?
Yeah, as long as you can define those terms, then yes, you basically can see what exactly you're going to pay out from beginning to end. And that is the thing with these credit card companies. Another blinding fact that most borrowers don't see is that, and that's the thing with these credit cards. These credit cards are designed to not close. It's like you said, if you're not using it for a year, they're like, "Hey, close your account," right?
Yeah.
Because you're not involved with the way we want things to go. So if you have your credit card active and you have you're making purchases on it, then it's not designed to close.
Yeah.
So you essentially will it's okay for you to have, in their eyes, it's okay for you to have an ongoing balance forever, because that's how they make money.
Seems horrible. Seems like they're just in it for themselves. Like they don't really care about the people who they're lending to or anything like that.
Well, I guess you can kind of get into, what kind of people have these balances that will almost never go away. You're essentially living outside of your means, and
But you have emergencies. Like regular people have emergencies. I mean, everything's
yes,
outside
yes,
of.
yes. But what I'm saying is, if you continuously, if you're making, let's say you're got $3,000 in credit card debt, and you're making your payments, and you're making, let's say, $500 a month, right? You start making your $500 a month. In 2 months, you paid down $1,000. But let's say you went ahead and added another $700. You're not really paying down your debt. You know what I'm saying? You kind of keep on just adding to it, even though you can make large payments and stuff like that. You assume, hey, well, I can make bigger payments. I can kind of push my financial means a little bit further, and you get into why do we have to kind of push our financial means? What are you purchasing with this? What are you using? And it's almost like it's just that extra little bit. Maybe it's just that extra little bit where, hey, if I could just afford, have a little extra income to afford to pay for the car that I don't, have to worry about, I wouldn't have to push the rest of my finances. Or maybe if I could help to make my mortgage payment, or to help in a savings, an account for college for the kids, or just future emergencies. And it seems like we can't do that on our own. We don't have that additional income. We don't have that excess of income.
So then, the people that get in debt are the ones who go ahead and get these kind of loans, the personal loan, whatever, mortgage, whatever it is, and they go ahead and life does happen. They get in a car accident, have to fix the car or get a new car. They have to pay medical bills, and they're essentially not working for this little bit of time. And those people just have to kind of like get into more debt.
Yeah, you have to figure stuff out. You have to just kind of keep pushing it a little. And sometimes, if you're making big payments and then something else happens, then you have to start making lower payments, and your debt just kind of increases. And so, yes, debt is a very tricky thing that almost every American has dealt with. Adult American has dealt with or dealing with, and how to get out of this is a big issue.
Yeah, but it seems like we're only talking about bad debt. Let's switch over to good debt and what that's like.
Well, I mean, you could talk about some good debt, but good debt is almost unattainable for people
Well,
who
for
deal with bad
well,
debt.
I wouldn't say it's necessarily not good debt, but it's definitely not bad debt. It's more manageable debt. You
Right.
should say.
Well, basically, I guess what you're getting at is that if anybody was dealing with any one of these situations and they were able to dig themselves out of it, that would have been a good debt situation.
Yeah.
You
Like you
you
get
had
a
to.
you get a personal loan for let's say $5,000. You buy a car for 2,000. Put $1,000 to fix it up, and then you're slowly going ahead and paying on that over a set amount of time.
Right.
Yeah, so that's like a form of, I guess that's good debt. Yeah,
Yeah.
because assuming nothing bad happens, everything runs smoothly. You've
Essentially,
set not a short term but a long term, knowing that it is going to take a little bit more time to go ahead and pay this off.
right. Good debt is essentially a debt you took out and were able to repay.
I don't know, man, because I think that's just manageable debt. Like it's just normal.
And that's what I'm
It's just
saying. I mean,
normal.
even if you decided to go ahead and make a crazy decision like I want the new iPhone and I'm going to get it. I'm going to go into debt to get it. Right?
Yeah,
So it wasn't the best decision on how to spend your excess of money. But if you're able to get out of it, you're not in a bad situation. But if let's say somebody was like, "Man, I need this operation and I'm just going to use this brand new credit card that I got to go ahead and pay for it." Is that bad debt?
well, assuming that your life's on the line,
And that's what I'm
I'm
saying
hoping
is
it's
that
manageable debt.
we're calling this bad debt and good debt. It's just unfortunate circumstances that you come under when you're having to borrow money. When you're able to repay it, when you have a plan and you're able to follow through and repay it, then it seems like good debt because you came out of it on the other side okay. But when it's consuming and there's just you know no foreseeable way to get out, then that's when it turns into bad debt. And unfortunately, for a lot of those situations when you have to kind of overextend yourself and get a payday loan or make a crazy decision on what you're charging on your credit card, and you're not able to get out of that, it's like you said, they just kind of compound you with higher interest rates and penalties and fees and all kinds of stuff. And it's I don't want to just kind of throw it off in like people who are just blatantly buying crazy ridiculous materialistic stuff and they create high debt
But
and
if they pay it off, it doesn't
right.
really matter.
I guess we could say irresponsible debt. If it's irresponsible debt that gets you into a situation, then there's not a whole lot you can do for that person.
I don't know, man. Now that I'm thinking about it, I don't think it matters whether it's irresponsible, good, bad, manageable, or anything like that. I think debt's just debt. And depending on how you come out of it, if you come out of it, determines what it is. So,
Right.
for example,
Well, that's what I'm saying. You can't really you can't categorize it fully, but you can kind of make little distinctions about it and how these situations that were surrounding these people kind of caused them to be in that
so
situation.
for example, I'm a college student, so I have about, let's say, about $10,000 in student debt. I don't have my degree. Is that irresponsible?
Again, we get into a big old debate
Yeah.
and seeing that most students that were believing that going into college to get a degree is a good thing at any cost.
Yeah.
But we're finding out that's not true.
Yeah. Like I have a coworker. I'm not gonna say their name, but I have a coworker, and he didn't even graduate. He was one class away from graduating, and he basically went ahead and said that he was about $70,000 in debt.
That's a lot of money.
That's a lot of money. That is a lot of money, and it's not his fault for doing that. He goes ahead and explains to me that the what do they call them? financial aid officer that was kind of helping them along
Yeah.
in this program at this one institution of higher education was basically screwing everyone over in that program, and that was using all of their federal funding, yes, as much as they could. And it's crazy because it seems that if you're a student, federal funding is pretty much guaranteed almost that you're gonna get that funding, which is weird because if you were a normal person, let's say you're 18 years old, 19 years old, and you apply for $1,000 and you don't have a job, you're not gonna get it,
Right.
essentially, unless you have someone co-sign for you or something like that. In this case, I'm a student. I don't have no financial backing. I make like about $18,000 a year. I applied for my financial aid, and I got approved for $3,000 subsidized, $5,000 unsubsidized, and another $1,500 for work study. That's what a total of about $10,000. I got approved for $10,000.
Yeah.
More than half my income.
Yeah, our government sees that debt as a little more responsible than any other debt. Unfortunately, we're realizing that that's not the case. When you have somebody who has $70,000 in debt and
no degree,
and
they're working these mediocre jobs, making a mediocre wage.
Right. Well, even if he was to, let's say he was to get a degree and get into a job, like we talked about, a $70,000 job is probably going to be the higher salary point, in which somebody can jump out of college and start earning. You hear stories about this and how people go 10 years barely being able to pay off their college debt.
Yeah, because they have to get their life together at the same time.
Yeah, you're trying to go into the private sector and you're thinking about, buying a home, buying a car, starting a family. And those are three core things that people would consider right out the gate from college, but now that's just not happening.
And it's said that millennials are now doing stuff later in life just because we can't afford to do anything right now.
Right.
Yeah, it's weird.
So what is we talk about the debt and it's like what is happening? I mean, I think it's a big disparity of not having enough income to survive.
Yeah, I mean, again, it goes back to the system was not set up for poor people. College was not set up for poor people.
Well, this is even reaching a little bit more. Poorness is starting to kind of reach over into middle America.
Yeah.
Well, we're not talking about under 30,000. We're talking about under 60,000. If you're under 60,000, then you're in a tough situation.
Yeah.
It's almost you're not poor, but you're not very well off either.
You're barely making it.
Barely making it when you have to survive in these times where housing prices are up, automobile prices are up.
Everything is up. Starting to go up. You got to make more money.
Right. You just
I don't know, man. Like, it's crazy how they... Well, even when we went ahead and went to go apply for a house, right? For me, I do have some debt other than college debt. And when we were applying for the house, I don't know what you'd call her.
She's like a mortgage
broker, something like that.
She's a mortgage advisor.
Okay, so this lady that was helping us was basically looking over all my debt to income ratio, my credit score and everything.
Yeah.
Nothing was necessarily great. I don't have 700 credit score,
right.
800, whatever the max is.
Yeah, nothing was stellar.
Yeah, nothing was stellar. Everything was either average or below average. And then she was looking at my debt and she's like, "Oh, well, you got $10,000 in student debt." I'm like, "Yeah, I had to take out a $5,000 student loan this semester." And she's like, "Don't worry about it. We don't really pay attention to that because that's good debt." And I'm like, "What? How do you not pay attention? How is it good debt?" And she's like, "Yeah, we don't care." for that necessarily. I'm like,
That
well,
what she was categorizing was basically when somebody's looking at your report and you're being considered for a loan or something like that. They are kind of they're trying to get an idea of who you are, and it's just black and white on paper. And when they see something like, oh well, you owe money to this institution, we're not going to hold that against you. But if it was 10,000 on materialistic things on a credit card, then it'll be like, okay, well, if you can't pay that down and you already accumulated all that, well then that's a little bit different to
yeah,
look at
yeah,
than just getting your schooling. But yes, it is something that's happening. What if somebody is out here spending $10,000 on credit cards to try to build up a YouTube channel or something
yeah.
to create a $1 million
That's what
company?
we're trying to do here.
And somebody's going into debt at 70,000 to get a college degree, and even 10 years out of college, you look back and you're like, man, I don't know if that was a very good choice because I'm barely getting out of this $70,000 debt that that got me here.
Yeah. This almost seems like it's justifiable. Because when I was going to school, everyone's like, you have to go to college. You have to go to college. Halfway through college, I was like, man, I don't know about this. It doesn't seem really feasible. Now I'm like 2/3 of the way done. I just got 40 credit hours left. And it's like, man, how much more debt am I going to get in? Like, I just took out $5,000. I'm not going to school this semester because it's so expensive. And I'm waiting for it to kind of come down because I'm considered an out-of-state student coming over here from Texas to Colorado. And it's like, how much more debt am I going to get in to finish off this degree? And is it even going to be worth it? It almost seems like this newer kind of class of 2019 or 2020 around this area, around this time, it almost seems like it's plausible or it's justifiable not to go to college. And because of that financial responsibility.
That's unfortunate that we're hearing a lot of that because of rising debt. You're hearing a lot of young people say, you know what, maybe it's not a good idea for me to go to college. And what's even more surprising is that you have, the elders saying, you know what, maybe you're right.
Yeah. Because they're the ones realizing that they're going to have to pay for
money.
Yeah.
That's like a lot of money. I mean, if you already seen cases of, your friend's kid took off, went to college, graduated, and they came back to live with their parents.
Yeah.
I don't know if you want to do that.
You want them to live there. It's like 18, you're out the door back in the day. You're done. And it's like, nah, we're sticking around till about 25, 30 years old.
Right.
Yeah, and it's like, what the hell? But anyways, yeah.
So I guess this brings up a little bit of a talk. I guess we can kind of round it out in universal income.
Yeah, with the benefits and all that. Because essentially that's what debt is. Reaching outside your financial means. However, if you were to have some kind of stipend or some kind of like little...
Maybe it could even be, for a lot of people, it could be stability.
Yeah.
It could just be stability, having something stable.
Yeah, because again, if I make $18,000, you give me $1,000 a month, that's literally more than half my income.
Yeah, for you. But for somebody who's making 50,000 and this extra 12,000 came in, that could kind of help them, push them just a little bit in that, what we were talking about.
Barely
That
making it.
little, you're reaching just a little, and this could be just that little extra.
Or you're using it for emergencies. Let's say you are one of these people that are making, like me, $20,000 a year, and you have an accident, you have a medical problem, you can use this money to go ahead and help pay for that. The other thing would be, man, that it adds value to people. And I know a lot of people are saying that, oh, everyone has value. No, you don't. If you are not valuable, you end up on the street, essentially, unless someone really is really, really nice and they want to go ahead and take care of you. But for the most part, a lot of people are selfish. And again, you'll just end up on the street. Look how many homeless people we have. And in the city of Austin, we have a bridge over there, and it's nothing but homeless people that live under that bridge.
Yeah,
and
you're
it's in the
starting to
middle.
see a lot more of these homeless communities kind of pop up. These
Yeah,
groups of homeless people where you kind of notice, oh, well, that's an area of homeless people right there. And yeah, I mean, for some
but
homeless people, they're, if they have
a lot of them,
issues and,
yeah,
and, and they're just not going to want to assimilate into regular life, then they're just going to continue being homeless. But
yeah,
for people that don't understand how they got there and wish they just had something to
yeah,
pull them out
and
of
you could
it.
even argue that a lot of them are veterans too that went into the military to
That's what
do
I'm
these
saying.
jobs.
Somebody
Yeah,
who just doesn't understand, how did I get here? I just need a little lifeline to get me out.
yeah.
This universal income could be something to help people in that
And we're
situations.
not saying that. Oh, I'm not saying that $1,000 is going to change or $12,000 a year is going to change their life. But if you are worth $12,000, I'm more than wanting to go ahead and maybe go ahead and keep you at my residence and kind of use that money to appropriate other things. Kind of,
Well, again, like I said, it's kind of a lifeline. If you have, if you know your $1,000 is coming up, your payment for your $1,000 is coming up. It's up to you to go ahead and make some good decisions and to try to put yourself back, to pull yourself out of whatever situation you were
yeah,
in.
yeah, and not use it for trivial things like material things or stuff
Right.
like
Yeah.
dumb
Yeah.
stuff,
Exactly. You
vacations.
very well can, and like I said, if there's people that just want to irresponsibly do things and can't assimilate with the normalities of life, then you're kind of gonna live in these unfortunate homeless type
A
situations.
perfect example would be my my cousin. She had a stroke essentially, and it paralyzed her, and so she couldn't walk, she couldn't move, she couldn't really talk, and so it was like, well, who's going to take care of her?
It's a burden.
It's
It's a burden
it's
on people.
essentially a burden. Yeah, exactly. It's a burden on people. It's like, well, I have to work 40 hours a week, and then I have kids, and I can't be taking care of another person plus my kids and everything. That's just a
Hmm.
financial burden. It's a I physically cannot be there for them or anything like
Right.
that.
Right.
And so the person who ended up taking them in was my grandmother.
Hmm.
And my grandmother went ahead and started taking them in, but my grandmother's kind of saying, it's not necessarily a burden on her, but it's more like she has to be the responsible one because no one else is going to be responsible,
Hmm.
or no one can be responsible. Not that they don't want to, but if my cousin were to be $1,000 a month, that would help my grandmother out in paying off or paying for the house, getting extra groceries, helping her out with transportation needs,
Right.
and even if getting someone to be there to help them out
Right.
when she
Right.
can't or
Right.
do something like that. And it wouldn't apply just to her. If one of my other relatives were to go ahead and take her in, if she was worth $1,000 a month, it would change. You could even argue like, hey,
You could possibly work a little bit less to
yes,
be there a little bit more to kind of help
help
out.
them,
Right.
yes,
Right.
yeah, or even, and I'm not saying that any one of them's bad, but in a situation where they'd be like, hey, you can stay here, I'll care for you, whatever, but you have to give me your whole thousand
$1,000.
dollars. Yeah,
Yeah.
your whole thousand
Yeah.
dollars.
Yeah. I mean, and that's it's kind of sad to say that somebody has to have a value in order for somebody to consider helping them, reaching out or whatever. But it's just that we're all in this. We're all kind of trying to pull ourselves up. And when you have some extra weight that you have to carry, it's like, man, I don't know. I'm trying
Yeah,
to do this already on my
yeah,
own.
yeah,
But if somebody was like, hey, I got some extra weight, but I also got a shortcut on how to get there, or I got something, I got some tasty food along the way, you
yeah.
know, then it'd be like, well,
I can't
if I
work,
got
but
some
I
amenities,
yeah,
if I
I
got
can't
some
work, but I can
amenities,
clean the house. I'll make dinner, whatever, this and
right,
that, whatever.
right. So, yeah, $1,000 can go a long way. It's, like we are talking about, it's something that we could learn how to use to structure our lives differently. Yes, again, you always got to consider somebody doing something irresponsible with this money. But if you have a lot more people who can rely on something that they don't have to work for necessarily, people say, well, if you don't have to work for it, you're just going to go ahead and just, use it even more irresponsibly. That's not necessarily the case. If you know that this is something that you're not going to have to work for, you can take that more responsible and be like, this is what's going to help me survive.
Yeah.
In any situation, this is what I got to help me keep going.
Or even exploring different outlets. For example, I work retail. Retail's not going to exist in 10, 15 years. My job might, because it's a little bit more involved, but basic retail like Sears and Kmart and all that stuff, these people that are shutting down for good, they're not coming back. But
Right.
if they were to get a little bit extra money to go ahead and be like, hey, I'm going to try this out and see if it works, and if it doesn't work, it's okay, because this is just extra money that I'm for sure guaranteed every month. And for example, that would be me at the podcast. $1,000 a month to go ahead and amp up production, getting those cameras, getting someone to come work over here, edit all the videos, making sure everything's fine, manage all the social media and everything. That will kind of help me kind of progress into another outlet. And if it doesn't take off, like a podcast doesn't really blow up or anything like that, then I could put this money into something else that might.
Yeah, right. I mean, it's very simple to be like, you use this money to live on, or you kind of save it up. And I guess ultimately what we need to kind of wrap up on is people need to look into their finances a little more.
And be responsible.
They need to, figure out. Just put it all out there. Download an app. Put it all out there. Put your finances out there. Get yourself a credit monitoring deal, and just start paying attention to this stuff.
Don't be buying stuff that's outside your means. Only use it for like really, really low end stuff. Like if you're gonna get gas, because you need gas to drive somewhere.
You just have to come up with a responsible plan. You have to put all your money out on the, you have to put all your finances out on the table. Take a really good inventory of how much you make, how much you're spending out, how much is left over. If you don't have any money left over, then you will never ever get out of debt. And if you realize that, then you have to start making adjustments. If you have a little bit of money left over, then you have to figure out, how do I get more money left over, or how do I use this excess of money to clear out my debt? How do I get rid of this debt? And it is tough. It's not easy. And that's why we're having this conversation, is because so many people are afflicted by this. And one greatest piece of advice is, if you don't know, ask somebody. Go look into that stuff. Go, Google it. Go Google it and go find out as much information as you can. Send me a comment if you have a question or something. Maybe there's something I know that could help you out.
Yeah, we're trying to stay away from the term Google it. Now we're trying to say ecosaya it.
Ecosaya that.
Ecosaya that.
If you don't know what ecosaya is, go look it up.
Well, it's a search engine, so go ecosaya it.
Go ecosaya that. And essentially, if you have any questions, you need some help, maybe we can help you. Maybe there's something. There's a lot of tricks that you can do to try to help improve your credit score. There's a lot of stuff a lot of tools you can utilize to try to get yourself out of this debt. But again, it can be tricky. It can be a little overwhelming to maneuver around, especially when you have a lot of these predatory companies that are coming after you like, hey, I can help you get out of that debt. How about you come and borrow some money from us?
Yeah, come on. You just have to sign. You're already approved. You're pre-approved. Just sign.
Yes, but without reading all the stipulations and
knowing,
without knowing what fees and other stuff, interest rates that might occur, then, it could be another
debt.
Another debt that you get into that is just revolving and you won't find your way out of. But if you really want to try to find yourself out of debt, do some research, ask some questions, put your finances all out on the table, go over them, come up with a plan, and it can happen. You can get yourself out of debt. Don't live beyond your means.
I think that wraps it up for this podcast.
Alrighty, guys.
See ya.
Until then.